Nike stock just released their latest quarter's earnings, and the stock is down about 4.54% on the day, and there's certainly quite a few headwinds the company is currently facing. To quickly summarize, they're currently having to deal with volatile exchange rates, tariff pressure, and global macroeconomic weakness. Revenue is expected to decline, and the gross margins are also declining. So it's easy to see why there's a lot of negative sentiment around this stock right now. Now, what's interesting is when they initially released this report, the stock was up by about 4%, and this is partly because they saw beats on top and bottom lines. Q3 GAAP earnings per share of $0.54 was a huge beat by 26 cents. And then revenue came in at $11.27 billion, which was a beat by about $240 million, but you will notice it was down about 9.3% year over year. So expectations for this earnings release were not very high in the first place. In fact, to show you just how bearish analysts have been for this stock over the past few months, look at this: earnings per share revisions for the stock in the last 90 days. 0 bullish and 23 bearish. Now, whenever a stock is facing headwinds, we have to dive in deep and see if it's short-term problems or long-term problems, because when a stock faces short-term headwinds, in reality, a lot of the times it can cause an overreaction and create a great opportunity. And Nike's now down around 27% in the last year. So does this create an opportunity? Well, let's start to dive into this a little bit more. I want to look more at the details of this recent earnings report, but before we do that, let's take a look at the dividend breakdown for this stock. Now, like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. Now, we can see the starting dividend yield for Nike is sitting at 2.23%. But here's what's so interesting about this. If we jump back over to Seeking Alpha and look at the historical starting yield for Nike, what we can see is this is now the highest starting dividend yield this company has had in over 5 years. And if we look at the last 10 years, again, this is the highest starting yield the company has had in the last decade. So the huge sell-off of Nike stock has led to a much higher than normal starting dividend yield. Combine this with the fact that they've been growing their dividend very consistently at a double-digit rate over the past 5 and 10 years at about 11% and about 10%. And with all that being said, the free cash flow payout ratio in 2024 was only 32.78% as the company generated about $6.6 billion in free cash flow, and the total amount paid out in dividends was about $2.16 billion. So from a dividend perspective, things actually look quite good for this stock. But let's go ahead and dive into this earnings report just a little bit more. Now, we can see third quarter revenues were $11.3 billion, which was down 9% on a reported basis compared to the prior year and down 7% on a currency neutral basis. So let's get a better understanding of what's going on with Nike's revenue on a quarter over quarter basis. Let's go ahead and jump over to our quarterly tab, and with ticker data, we'll go ahead and come up here and plug in revenue. Now, what we can see over the past decade, revenue on a quarterly basis has clearly been trending upwards, and we can see it peaked in Q2 of 2024 when they hit about $13.38 billion in revenue. But ever since then, revenue has been steadily declining, and we can see in Q2 of 2025, Nike's revenue came in at about $12.3 billion, and like we just saw in this earnings report, the third quarter revenue came in at $11.3 billion. So that means revenue is going to be coming in close to about right here in Q3. So that downward decline is continuing. So obviously declining revenues are not a good sign, but the pain doesn't just stop there. We can see gross margins continue to decrease. So let's go ahead and jump over to the profitability sheet. I've already plugged in Nike. Now, what we can see with Nike over the past decade is gross profit has been relatively stable, but it's taken a little bit of a drop in the last couple of years. In fact, in 2024, it came in at about 44.6%. But if we look back at the earnings report, it was only 41.5% in this most recent quarter. That's a pretty steep decline. So declining revenues and declining margins is a pretty disastrous combination. Now, if we scroll down, we can see what the key for Nike is. The operating environment is dynamic. That's another way of saying they're struggling. But what matters most for Nike is serving athletes with new product innovation and reigniting brand momentum. This is the key for Nike. They've lost their brand. And there's a lot of evidence of this as well. Let me show you what I mean. Obviously, there's a lot of competition in their sector, but that's nothing new. Despite this, Nike has been dominating the market share in their sector, specifically in footwear. But this chart that we're looking at is showing us data from 2022. What's been happening over the last few years? Well, look at Nike's revenue from footwear over the past few quarters. We can see it looks like it peaked in fiscal quarter 2 of 2024. Look at this decline we've been seeing over the last few quarters. It was the lowest revenue from footwear the company had seen in over 3 years. So they've certainly started to lose market share in the footwear sector. Meanwhile, if we scroll down, revenue from apparel seems to be holding on, but it's not really growing, and the same is true with revenue from equipment. If we jump over to our stock screener, we can see one of the bright spots is it looks like revenue per share over the last decade has consistently been growing. But what the management team has told us is we can expect revenue in 2025 to be about 10% lower than it was in 2024. 10%, that's a pretty significant drop in a 1-year time period. So obviously right now with all this bad news, there's a lot of bearish sentiment around the stock, and that's evident with the sell-off we've seen in the last year and the sell-off we're seeing in after hours after this most recent earnings report. But like I said earlier, we have to ask ourselves, are these short-term headwinds or long-term, and does this create a buying opportunity? Well, to start off, let's talk about the valuation here for just a moment. $71.86 and in after hours down to about $68.70 at the time of this recording. Now, whenever we're talking about turnaround plays, obviously, it can be hard to project future earnings, future free cash flow, especially when it's going to vary so much over the next couple of years. But here's what we can do. We can invert. We can look at it backwards looking, and this is a Charlie Munger method. So we're going to use a reverse discounted cash flow analysis to see how much free cash flow growth is currently priced into Nike stock. So what we can see right now, again, the current share price is showing $71.86, but we have to keep in mind after hours, it's closer to about $68.30. So how much free cash flow growth is priced in? Well, with 0% free cash flow growth over the next decade, we come to a reverse DCF price per share, $58.34. So how much free cash flow growth do they need to get up to that current share price? If we go ahead and bump it up to 5, we can see we get quite a bit above the current share price. If we drop it down to 2, we get quite a bit closer. If we bump it up to 3%, we get very close to the current share price. But what about what the stock is trading at after hours, $68.30? Well, let's drop it back down to around 2. Let's go ahead and bump it up just a little bit, maybe 2.25, and you can see we get almost exactly the current share price. So what is this telling us? Well, the market is pricing in only 2.25% free cash flow growth for Nike stock over the next decade. So like always, we have to ask ourselves, is this justified? If we think it'll be higher, then the stock is undervalued. And if we think it'll be lower, then the stock is overvalued. So what do analysts think? What do analysts expect when it comes to things like earnings growth moving forward? Now, like we already know, the management team has told us earnings are going to be significantly lower and revenue is going to be significantly lower over the next year. But after that, it is expected to recover. And we can see that's evident with analyst expectations. Let's take a look at Seeking Alpha's expectations. If we scroll down, we can see over the next 3 to 5 years, they're projecting about 3.15% earnings growth. Now, you might be asking yourself, well, that's earnings growth. We're talking about free cash flow. Yes, but if we jump over to the free cash flow analysis sheet and take a close look at free cash flow conversion, which is basically telling us what percent of earnings are actually becoming free cash flow, we can see Nike recently has done a pretty good job of converting earnings to free cash flow, so there shouldn't be a whole lot of a difference when it comes to things like earnings growth and free cash flow growth. So when I look at this reverse DCF, yes, there's a lot of problems going on with Nike right now. They're struggling with their identity. Revenues are dropping and their gross margin is dropping. But even with that being said, only assuming 2.25% free cash flow growth over the next decade annually definitely seems like the low end. Yes, if we look at things like the forward PE ratio, it looks very high because obviously that's pricing in the earnings drop over the next year. But if we expand our time horizon, again, only 2% free cash flow growth over the next decade certainly seems on the low end. So with that being said, the stock does look a little bit undervalued at its current prices. But here's the thing, I'm not a fan of investing into turnaround plays. I don't want investing to be any more difficult than it already is. I want to buy stocks that have very predictable cash flows, predictable earnings growth. And while there's certainly a lot of money that can be made in turnaround plays, and maybe this is one of them, this still isn't a stock that I plan on adding to my portfolio. But with that being said, there are super investors who have made note of Nike at its current prices, like Bill Ackman, who has now added more Nike stock to his portfolio for 3 consecutive quarters in a row. And in total, it now makes up around 11.26% of his entire portfolio. But go ahead and let me know what you think of Nike stock in the comments down below if you plan on buying or selling. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.